Hi guys, welcome back. Today's video is a very important topic. It's called property management, and in particular it's for overseas landlords from Singapore, Hong Kong and Malaysia that are owners of UK and in particular London property. Not many viewers will know this, but a lot of the new developments that have popped up around London in the last 15 years have been showcased in Asia and bought by overseas investors as either buy-to-let investments or owner-occupier properties for their children to properly live in whilst they're studying in UK universities. In the early years, the prices that were being charged for these properties on a price per square foot basis was what I would call reasonable and fair. However, as the years progressed, the results that the developers were getting were very good. That means if they had 100 units, they would be selling possibly 80, 90 and even 100% of that development off plan. That's even before it's built, to overseas investors. That's cash in the bank, and then all they need to do is deliver and they've already made their profit. The buyers, investors on the other hand, will look at this as a two-pronged solution. One is it's a UK investment that will bring in a rental yield, and secondly, they're hoping for some capital appreciation. If you're buying at market price, then there is a good chance that you could gain on capital appreciation. However, if you're buying at 20 to 30% above the market value, then there's a risk that you're overpaying and you're not going to see the capital appreciation in the next 5 or 10 years. Here's an example of a property that was launched 10 years ago in the southbank area of London, close to the Tate Modern, and it's called Neo Bankside. It was launched at around £2,000 per square foot, and 10 years later it's hardly achieving the same price. If we look at some of these right move sold transactions, you'll see a lot of investors that bought 10 years ago have actually sold for less than they bought these properties for when they originally purchased. Another classic example for overpriced project is number 1 Blackfriars. Now the problem with this location is it's not a residential location, and it's not what I would call an aspirational location for people to want to live. For a studio flat, the price started at £1 million, and then for 2-bedroom flats it was £2 million plus. In order for you to get a 5% rental yield on £2 million, you've got to be renting at £2,000 per week, which in this location has proven to be impossible. One of the motivating factors for investors to buy UK property was the low sterling versus a high local currency, which sometimes meant that they were buying because of the currency devaluation. The problem was they were also buying 20 to 30% over the market value. Fast tracking a decade later, the currency has depreciated even more. The pound sterling is low, and the local currencies, in particular in Hong Kong and Singapore, have continued to get stronger and stronger. What does this mean? It simply means that the property that you bought 10 years ago at £1 million in today's market, if the currencies, and in Singapore, for example, today's exchange rate is $1.6 to the pound. That means that your property has gone down in value by approximately 30%. This is a huge problem for the investors because it leaves them owning an asset that's worth less than they actually paid 10 years ago. So what's the solution? Either you wait for the currency to go up, and whether that goes up in the next 5 or even 10 years, and we just don't know whether it is going to get stronger. What I can say is that the Asian economies seem to be getting stronger and the Western economies seem to be losing their currency and their value, and it's a continued cycle that we're seeing for the last 15 years. Another option for the owners would be to actually cut their loss with their UK property and try and make the money back through alternative investment strategies, which may include stocks and bonds or purchasing another property in your local country or area. It's a very difficult decision to make, and what we're seeing is a lot of investors hold on to properties that are not worth the money that they were bought for and the rental yields are extremely low. Another hurdle that landlords are facing is with their current rental and management agents. A strategy for the developers and for these exhibitions when they were originally launched was that the developer would bring along a UK agent, and there were 3 agents in particular. One of them is called Chase Evans, the second one is called Life Residential, and then you've got the local international agents like Savills and Knight Franks that will do in-house lettings and property management too. So these are the 3 or 4 names that hold possibly 80 or 90% of the stock of off-plan lettings and management. Let's look at 10 of the common complaints that overseas landlords face with their UK agents. When we take on new management instructions, the number 1 complaint that our overseas landlords find is they have poor communication with their current agents. They often say in year 1, when the flat was new or the apartment was new, it was excellent, but year 2, year 3, year 4, what they find is that the staff have changed, the emails get responded to late, and sometimes it could take up to 2 weeks for them to even get a response to an email. Number 2 would be language barriers. With communication being key, it's really important for the local agents to try and get the investors, their landlords, their clients to actually understand what they're trying to convey regarding their property. And number 3, which is something that I don't always agree with, would be the high fees. Typically, most of the agents will charge between 12 and 15% plus VAT for a full lettings and management service. And the number 1 consideration for you as investors with your property being so far away from home is you just need to make sure it's in the right hands. A company that's dynamic, that's proactive, that's personalized for your requirements and for your needs, and make sure that they don't just treat your property like a number, and they treat you like an individual, and your property is something special for them to deliver on their service and their promise to you. In number 4, we've got difficult tenant selection. Now, what's really important is to make sure that your asset management company, your property management company, are not finding you the first tenant, which is my mantra. They're finding you the best tenant for your property. And that doesn't necessarily mean it has to be the highest rent. It just means it has to be headache-free and a solid, reliable tenancy. And you've got to have a relationship with your asset management where you trust them to find you a tenant and recommend a tenant that they think would be the best suited to you. Number 5 would be maintenance issues, and being so far away from the property, what you'll find is that when you get a report of a leak underneath a sink, a washing machine not working, or it could be a fault with one of the appliances, you've got to rely on your managing agent to make sure that they can have these issues resolved quickly and cost effectively. And a complaint that we often hear is the issues are taking too long to be dealt with, and the charges that we are being charged are astronomical. Plus the agents are charging a 10% fee on whatever the call out charge may be and the cost of remedial works for maintenance issues. Point number 6 would be unrealistic rent collections, and this is only comes into play when tenants are in arrears. What is the procedure for the managing agents to collect arrears rent? Overseas landlords would expect to either have their arrears rent paid as soon as possible or be in a position to evict the tenants in accordance with home laws, which could be very fast. But however, in UK law, it needs to be an eviction process, which could mean months of not getting any rent and eventually getting an eviction process up to 6 to 8 months later. Point number 7 will be lack of financial transparency. This is where you should be getting monthly statements and monthly rent collection turned around, paid into your account. Sometimes you can get quarterly rents, 6 monthly rents or yearly rents. Point number 8 would be unexpected expenses, and this is normally found in the agent's terms and conditions. Every agency is a running, operating business that has got expenses, and charges are applicable. Landlords should be aware, so this is where the transparency comes in, and it should always be in your terms and conditions. If you've got any questions, always refer back to your terms and conditions and then reach out to a senior person within the organisation or the estate agency or the management company that you're working with. Point number 9 would be unfamiliarity with London regulations. There could be a licensing implications where you've got more than 3 bedrooms or 3 bedrooms where you've got 2 different households living in the same property. And there's various other things as well, including eviction processes that we've spoke about as well. It's very important that you get updated by your asset manager, and your asset manager should have all this information ready for them to convey that to you verbally or ideally via email too. And lastly, point number 10, which is a time zone difference. It's not too bad because Asia is normally 7 or 8 hours ahead of UK time, but it's important for both the agents and also the landlords to appreciate and also respect the local times and when they're trying to communicate. We've had landlords saying that they've been called at midnight from a UK agent, and we've seen agents also confirm that being called at 6 o'clock in the morning from overseas landlords. So if you can just remember, it's 7 to 8 hours ahead on either side, and hopefully that will put you into good stead. There we have it, 10 key complaints made by overseas landlords. If you're facing more than 3 of those complaints, that's a red flag, and it's time for you to consider changing to help you maximize the return of your UK investment and make it stress and hassle-free. Our email details are below. It's info@shariahomes.com. I hope you've picked up some tips from this video, enjoyed. If you did, make sure you share, like and subscribe. We appreciate it. It helps the algorithm, and it also motivates me to do more of these videos for investors and people like you. With that said, Monty Nawaz, take care, and I'll see you soon.